Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can understand what I see in the global landscape. First off, we've had a little bit of volatility in the last week or so in the U.S. markets. We're starting to see some stabilization of that. While the U.S. markets are down 2 or 3% in the last week or so, the emerging markets are down 10 to 20%. I'll take a look at Russia. Russia's down well over 20% in the last week alone. Russia's problems are created by, of course, Russia. We've had that situation with Crimea. There's been sanctions put on Russia. And of course, oil dropping down to around $55 to $60 a barrel, of course, doesn't help Russia either because their main product to export is, of course, oil. And at these current oil prices, they're being hurt. Now, of course, low oil prices really help the U.S. economy because remember, we're a consumption economy. Most people in the U.S. use gas and oil. And of course, oil products are used in a lot of different things every day that you use at your home. Oil being cheaper adds actually more to spending power. So ultimately, I think this will help GDP. I don't think oil prices are going to stay this low for a long time. I think ultimately, you're going to see probably a test of the lows and then oil slowly start to move back up into that $80 to $100 a barrel range. We're actually looking at oil right now and looking at if we want to add a position of oil to our client portfolios through the XLE, not buying it yet, but looking at it. We're going to wait till we get some signs of a bottom in oil, but I think it represents a good long-term opportunity in a portfolio. Again, we're looking at it, we're doing some research. We may add a position across the board in all of our client portfolios. But generally speaking, the economic indicators in the U.S., they're actually really good. Unemployment, GDP, earnings estimates, and so on. Things look good for the U.S. We continue to avoid Europe because Europe really is just a slow growth economy and they're in a slight recession. And if I look at the emerging markets, given what's going on with China and so on, at this point, we have no assets at all in emerging markets. And of course, we sold a position that we did have there, about a month and a half ago. And of course, that position, if we wouldn't have sold it, would have created a loss in our client portfolio. So we're actively managing the risk. We're looking for upside potential. We like the U.S. economy. And generally speaking, we're invested primarily in the U.S. economy right now. If you're a client of our firm, give me a call if you have any questions. If you're not a client, give our office a call, schedule a consultation, and become a client. We always like taking on new clients who are nice people to do business with. Make sure you have yourself a safe and profitable day.